Bitcoin crossing 50,000. We're going to start. We have a bunch of charts and tables here for you. We've got the price chart of Bitcoin, which shows that through the beginning of this year, over the last 12 months, remember, we were only at $10,000, $11,000 a year ago. So we have gone from about $10,000 1 year ago to today, we're sitting around $50,000. When you look at the return on this asset, it is absolutely nuts. Go from 10,000 to today. Now, if we go and we actually look at Bitcoin versus traditional assets, the return on investment, you can see Bitcoin up about 364%. Gold is down 8%, S&P 500 plus 27%. But if you go all the way back 5 years, Bitcoin up 8,400%, video game numbers, and then 10 years, it's up almost 700,000%. Gold sucks, down 3%, and the S&P 500 up 281%. Pretty incredible. Then we can look at the Bitcoin price closing history by level. All of this data comes from casebitcoin.com. It's one of my favorite websites on the internet, casebitcoin.com. The Bitcoin price closing history, 71 days Bitcoin has ever been above 50,288 when I screenshotted this morning. That's right, I was doing work. That is only 1.5% of Bitcoin's life has ever been higher than where it is today. So for 98.4% of Bitcoin's life, it has been lower than it is today. Now, if we then go and we look at Bitcoin versus the select indexes and assets, what we can see on this chart is a whole bunch of different statistics. So we can see from a market cap standpoint, Bitcoin still right under $1 trillion, gold just over 10 trillion, it's about 10x bigger, the S&P 36 trillion, and the NASDAQ 21 trillion. So Bitcoin is materially smaller than the rest of these assets. The 24-hour volume, though, on this asset compared to, let's say, a gold, is that Bitcoin has $7 billion in 24-hour volume. The inflation over the next year, Bitcoin has slightly higher inflation than gold. The inflation over the next 10 years, Bitcoin is going to be much, much slower than gold. And then the return on investment over a 1 year period is just bonkers. Bitcoin up 363%, gold down 7.5%, rounded to 8%. The S&P and NASDAQ both up about 27%. And TLT, the US Treasury, is down 10% over 1 year. Compound annual growth rate over the 10-year period. Bitcoin, 142% compound annual growth rate over the last 10 years, given where the price is today. Gold down, lost. The compound annual growth rate of gold for the last 10 years is negative. Absolutely pathetic. The 14 and 20% for S&P and NASDAQ. Volatility, gold is the least volatile. Volatility is not good or bad. If it goes in your favor, it's good. If it goes against you, it's bad. Bitcoin is the most volatile, which is actually a good thing because it's going up. It's going in the favor of the bulls, not the bears. And the Sharpe ratios. This is really important when you start to think about the portfolio construction. Bitcoin by far has the highest Sharpe ratios of any of these assets. And so when you look at that, it begs the question, why has Bitcoin continued to perform so well? So, of course, if we want to understand Bitcoin, we want to understand what's happening. Let's go to the wizards. First, we've got the young wizard, Will Clemente. He had a great tweet, was this yesterday, that said, Coinbase buyers are back. This is the Bitcoin balance on exchanges of just Coinbase. So this is, you can see right there in the middle of July, we saw a bunch of Bitcoin coming onto the exchange. That's that gold line kind of accelerating. And then basically it came off, but it was a net gain still in early August. And then we've been going sideways. And then recently over the last week of August or so, there was a very material drop in the amount of Bitcoin that was on Coinbase. And again, as we've talked about in the past, the more Bitcoin that's on the exchanges, the more likely it is that people can buy or sell, or can sell it. The more Bitcoin that is not on the exchange, the harder it is to sell. Therefore, there is less selling pressure on the actual asset itself. Then if we go and we look at my friend Travis Kling, Travis coming out of the woodwork last night with a great thread. One of the tweets, he said, importantly, the price appreciation of Bitcoin recently from 30 to 50,000 has come during a period of the lowest spot volume in the last year. Last time spot volumes were this low was mid-October of 2020, and Bitcoin price was around $11,400. We all know what happened next. What that means is Bitcoin then went from about $11,000 to $64,000 over the coming 5 months or so. And so again, history is not a predictor of the future, but if history was to repeat in any form or fashion, or was to rhyme to some degree, it is likely that Bitcoin is poising for a massive move upwards. So pretty incredible to see such low spot volumes right now, even though Bitcoin has gone from 30,000 back up to 50. Then he went on and he had a second great point where he pointed out and he said, this period of low spot volumes has also coincided with a period of low realized volatility for Bitcoin, as shown below with the 4-hour chart. Bitcoin is coiling. There's a tendency to do this from time to time. What that means is as the spot volumes have come down, I mean that people aren't buying on more retail exchanges. There's not that much buying happening, but prices still continue to grind upwards. And so when that occurs, the volatility is shrinking down. So you get this almost coil, right? And it coincides with what Will would call more of like a supply squeeze, is you almost get this asset and it's packing, and then it explodes. Now, historically, that explosion of movement or that violence of movement can be up or down, right? So it can work in both ways. But given what we're seeing with the on-chain metrics, it appears that Bitcoin is coiling for the supply squeeze and is likely to move much, much higher and be quite violent. Now, with that said, that doesn't mean it will happen. But when we look at the actual Bitcoin on-chain, about 80% of Bitcoin is being held by illiquid hands, the people who have long-term strong hands who have a history of not selling, if you also account for the lost coins that we know of. So about 80% of the active Bitcoin that is not lost is being held by these long hands that's in circulation. And so when you get this coiling kind of effect, and you also get the setup on chain for the supply squeeze, what it is likely to be setting up for is an explosive end of the year. So, Joe, John, what do we think is is there a counter argument, or is just every single data point we're looking at saying, hey, this is setting up for just absolute fireworks through the end of the year?
Yeah, I was reading an article this morning, and a lot of the mainstream media websites are trying to point out reasons as to why Bitcoin has crossed 50,000 for the first time in a few months here, other than just briefly the other day. And a lot of them pointed to Twitter potentially integrating Bitcoin as an option for tip jar. They pointed to El Salvador, Bitcoin going live as a legal tender in El Salvador. But at the end of the day, like, these metrics tell the story, right? And if you follow these, it's historically proven to be a very good estimate and very accurate from the point of price action. So I think what we're going to see is we've seen a lot of the other digital assets, whether it's Ethereum, NFTs, other currencies, whatever it might be, they've outperformed Bitcoin for the last, couple months now, honestly. And I think what we're going to see is we're going to see Bitcoin kind of remind everyone what's going on here. And I think over the next 3 to 4 months, what Will and some of the other people that you mentioned are bringing up is like this price action looks really good, and it's difficult to find counterpoints within the actual data on chain that says that we're not going to go meaningfully higher.
The only on-chain metrics that over the last few weeks appears to be somewhat negative, or at least could provide ammunition to somebody who is bearish right now, in my opinion, is exactly what Will's been saying, which is the transaction volume is down quite a bit. It has been grinding up a little bit, but the transaction volume would also explain why there isn't tons of spot volume, there isn't tons of volatility, all that type of stuff. So I think it's all kind of intertwined. The other argument I think you could say is that the NFTs, all the smart contracts platforms, the Solanas of the world, all of these other like shiny things that have been moving up significantly appear to be taking away some of the public conversation, like the narrative among a bunch of these folks. But when the king's ready to move, ain't nobody gonna forget who the king is, right? I mean, when you listen, this happens all the time where basically Bitcoin moves up, then people rotate out of Bitcoin into alts, right? Then the alts kind of have the alt season. And then all of a sudden, when it's time to move, everyone runs right back into Bitcoin and the thing explodes upwards. And the reason being, because it has such a significant kind of liquidity to it. And when it decides to move, there's just so much more capital that can be put into it. So if you're a large institution, if you're a large organization, you're much more likely to go put it there than you are to try to go pick, some $10 billion or $1 billion market cap asset and hope that goes up. What's up, guys? Bang, bang. Thanks so much for watching the Best Business Show today. If we're going to be the best business show, we obviously need the best partner. That's why the exclusive sponsor of the Best Business Show is SoFi. They're an all-in-one platform that allows you to invest in all kinds of different assets, including stocks, ETFs, crypto, IPOs, and they even have an automated investing function, if that's your thing. So before we start getting after it again, make sure that you go download SoFi, you get an invest account, and when you make your first crypto trade, regardless of what you buy, they'll give you $10 in Bitcoin for free. It's that simple. Head on over to SoFi.com/Pomp to get started today. Thanks so much for watching, and I hope that you come back and watch more of the Best Business Show tomorrow.